Are you ready? Bueno, desde...
Well, from Houston, London, and New York, the truth is that I told David, I don't know whether to introduce himself or to introduce him or not, but they've been saying everything since the morning, and they are causing huge expectation in the 5th edition of Forex Day. But I'm nervous. Rob Booker, you know him already. Many of you admire him, follow him. I know that for a fact. He is one of the most popular guys in the industry. He's, well, you are always touched by his speeches, and he is a member of he's one of the most amazing podcasts. He is author of the ebook of Forex 10, and also the what's considered the most downloaded ebook from the world of Forex. Next, you also know him as well, because it's not the first time he's in the Forex Day. 3rd year in a row, he's here again. It is a real honor. He's been the chief strategist in several companies, one of the best traders and analysts in the city. If you've seen him before, you want to come back. He is one of the workers of the city in London that you should follow in Twitter. Author of Currency Trading and Intermarket Analysis from London. And well, I really want to hear what he's going to say. And Boris, it's a pleasure. Boris, 5th year in a row, we have the pleasure of having one of the best experts in currency pairs. He started working in Wall Street over 20 years ago. He's the weekly, he works for the CNBC Asia as well, and CNBC Europe. He's the author of several very successful books. His daily study on currencies is mentioned by most agencies. He's a partner with Catalan in BK Asset Management, one of the most important blogs in the sector. David, they're all yours. I don't know. I don't know what to expect.
Muchas gracias por la señora, by the way.
Muchas gracias. Y muchas gracias, Madrid, right?
And thank you, Madrid. Well, I don't really know how to start, or how can I start with these 3 amazing guys here. Well, this is a huge panel. Everything is ready with these 3 champions. Really, this is the first time they're all together in a panel, at least in international events. So, I mean, we could expect anything from them. This panel is going to be fun. It's going to be, you're going to learn huge little things. You're going to see many different things. You're going to learn things about their lives and how they operate. That's why we call it the awesome training system. And well, the truth is that it's going to be something to remember in the history of Forex Day. I don't know, are you all right? Is the translation working all right? Can you hear it properly? Yes? Great.
Okay. Switch the channel, cambia el canal.
Change channel. You might be in the wrong channel. And well, I'm going to ask you some questions. I'm going to try to moderate this because I might ask something and they might say something different, but I'll try to do something with it. And last, we're going to have a Q&A session. We want it to be interactive. We want all of you to be part of it. So without further ado, I'll start with the first question. And it has to do with, we had a macro event with the elections in the UK. I want you to tell us how you spent that day and what did you do? Which kind of strategies were you expecting, or were you nervous? Open, or were you expecting a possible gap? Did you have something open back then, open positions?
Basically, I was long sterling. Okay, so first of all, I have to let you know that I was wrong about my expectations. I thought that Theresa May was going to win with a majority, not only with a majority, I thought she was going to win with 370. So she got 318 or 19. So I was wrong. So, but that's not important what I think. So when my family or my wife asks me, is he going to win? Are we going to have a Brexit? What do you think? And we're meeting with people, right? And I say, it doesn't matter if you really know what I think, find out how I'm going to trade it, if I'm really sure. And so basically, I was wrong. I thought she was going to get the majority. We had a long sterling dollar trade. And, but a few, like half hour before the 10 p.m. exit polls, I said, we need to hedge because no matter how clear and sure I am, we have to short sterling against something. And for me, there was a big trend line resistance, like you see it, it looked like this, in sterling yen. So I basically shorted sterling versus the yen. And this is a panel I'm not going to get into so much. But here's what you do afterward. So sterling yen fell by over 200 pips, made money in that trade. But what about the one where I was long 129? I had a stop, a 127. It was a long stop, I know. I usually have long stops, long trade. So here's what happens. I had a stop for the clients also at 127. The market fell to 126.95. Made sure it stopped me out, and then it went back up. My client...
It went lower later on, so you would have been stopped out anyway, so...
No, it didn't.
Yeah, 26, later in the... It did good.
Yeah, it did, yeah. Okay, later, yeah, actually, yeah, so I didn't feel... People said, what do you do? I said, why didn't you move the stop? I said, no, I'm not going to move the stop. I'll let it be stopped out, and then we're going to go back in again. Now, I have to be careful about this point. We're going to go back in again. And this is something we should talk about. When you're wrong, what do? Are you just unlucky, or are you just plain wrong? So, long story short, we issued a long... a sterling dollar long again, but the big support for me is becoming now 127. And why was I so sure, by the way? Why was I confident going into the UK election? Because before the French elections, everybody was saying, no, it's Macron who's going to lose and Le Pen is going to win. And they said, look, people were wrong about Brexit, they were wrong about Trump, and they're going to be wrong about France, and Le Pen is going to win. I said, no. I said, I don't need to tell you that France is not the UK. I don't need to tell you that France is not the States. But I know the French, maybe because I'm Algerian, I don't know. But he is going to win. He won, the euro popped. So I was sure. And then in the second round, he won. The euro rose a little bit. It fell and went back up. And we made 290 pips. So that confidence that I had going into the UK elections built me up, and it made me overconfident. And I didn't care. I said we're going to have a 370, but I had a plan B, and it was shorting sterling yen. We're going to see what happened afterward.
Boris, you traded this from the airport.
I traded this from the airport. So I had a very interesting story. So it's interesting that Ashraf brought up the European elections because the French elections. I'm sorry, the French election, because that was actually a very bad trade for us. We were stupid enough to think that Le Pen had a chance. I'm talking about the first round. Le Pen had a chance of going into the second round. So we were short euro yen into the French elections and got destroyed. The English elections were much more interesting because before the UK election, I actually believed, like Ashraf did, the polls and everybody else. We have a lot of UK customers, and I kept saying, what's the likelihood? They say, it's tough, but she's still going to win by 10%. Very likely she's going to expand her majority, even though most people don't like her. I had a sinking feeling in my stomach that she was really going to, that Labour really had a lot more momentum, but I wasn't sure. I was trusting other people's opinion. Ahead of the UK election, we got long pound yen. But the way I trade is I basically assume that you're holding an ice cube in your hand. The longer you hold the ice cube, the faster it's going to melt. So with me, it went 40 points into profit for us. It actually went against me. I was very concerned because if you if you think that the market is really bullish, my whole thesis was ahead of the UK election, market is bullish. Dollar yen was bullish because James Comey really didn't damage Trump that day just yet. It's coming. But so I thought pound yen was going to be the best trade ahead of the UK election. It went up a little bit, and then it started to really go down. And then it came back up, and I said, you know, this is not acting like the market thinks it's a done deal for Theresa May. So it went 40 points in the money for us. I blew it out. We just took it out, took our profits, and forgot about it. And then we just waited for the results. The moment the exit polls came out, thank you, David, for scheduling Forex Day on the time of the British election. He didn't know that it was going to be UK election. I am literally sitting on what's called the air train. The air train is the train in John F. K. Airport that connects all the terminals. I'm literally sitting there. Kathy tweets out, exit polls show she's losing. You know, she's like a 318. Now, the one thing I know about the UK elections is that exit polls are the only thing that is accurate. So I don't even think for a second. I see on my phone, my MT4 is going crazy. I see on my phone, it's going down. I literally just sell. I just sell, and I don't worry about it. Now, I wrote a column. If those of you can probably use Google Translate and just take a look at it. If you go to my Twitter feed, FX Flow, you'll see the link to the column. I'll repost it again after the show. Exactly how I traded the UK election. And this is, I think, very important for any big event in the FX for the retail trader. This is just my way of trading, but I think there's a lot of interesting points you may be able to take away. Number one, you trade no stops. Usually, I'm always trading with stops, and I trade very differently from Ashraf. Ashraf trades very large positions. I trade for 10 points, for 10 pips a day. So my stops are very, very small. And Rob trades with no stops. I became Rob Booker for the UK election trade. Let me tell you what I did. I traded very, very small. What is small? Let's say I have a $50,000 account. My initial trade was only 1/2 of my whole account, 20,000. Why? Because I'm trading with no stops, and I expect for the trade to go 50, 60, 80 points against me in 1 second. I expect to lose money. That's why you trade small. Then, as it goes against me, I sell more. As it goes against me, I sell more because I'm confident that it's going to come back down. It does that. It comes back down. Now, here's the very important point that nobody will tell you. Nobody will tell you this because this is how real markets work. In very, very fast markets, you will never, ever be able to close your profit. Your broker will never let you close your profit. You're going to hit it, it's going to say late market, rejection, rejection, rejection. The only way you can make money in these events is if you put a limit order. In other words, you put a price and the market goes through that price and the broker has no choice but to get you down. And I'm trading with probably the most honest broker in the world, which is Oanda, which has never been fined, which is always considered to be, you know, I know them very, very well internally, and they're really a great broker. And I'm not you know, advertising for any kind of broker. I'm just simply saying that this is true with the best broker. You can imagine what it could be true with the worst broker. Everything will not work at that point because it's not the fault of the broker, it's the fault of the market. The market is so super fast. So if you want to make the money, you have to buy limit. You have to put limit orders. And I kept basically buying everything back 30, 40 pips. I would sell it, buy it back, 30, 40 pips, sell it, buy it back. So
you mean you put the take profit, right?
Take profit. Yeah, that's what I mean. I put
Sorry,
take profit.
just to let you know, when I trade for myself, I don't trade, I don't use stops, and I always have take profit.
Right.
So I'm with you on that.
Well, I never trade like this, and I always have stops, and I always have take profits, but I'm actually exiting a lot of times market. But in this case, the two most important takeaways is don't trade with a stop, trade small, and always have a take profit. And then I just kept doing it, and I kept doing it, and I kept doing it. You can see, I posted on this link, you can see all of my trades in the pound, where I just sell it, buy it, sell it, buy it, sell it, buy it. And of course, you know, you're never going to make the money that you want. You know, I always cover too early. I could have had 100 points. I made, you know, 70 points, whatever. It doesn't matter. You take what the market can give you, not what you want. So I think, you know, that's type of trading is you always do that kind of a trade in very, very fast, very active markets. If you do that, you will be okay. Because even if you're wrong, because you're trading so small, you could go 200 points against you. It's not going to destroy your account. The single biggest mistake that I see traders do is they go their whole account into a position, they can't close it, it goes up against them, it margins them out, it takes them out, and then it goes down and it makes money. That's the easiest way to lose your whole account, is to be certain that you're going to win, because I will guarantee you will lose. If you trade like you're very defensive and you're very afraid, you have a much higher chance of winning. So the Rob Booker method really worked.
All right, so I loved those answers. I didn't actually know that there were elections in the UK.
Because I'm an American and I don't know anything.
But hi, everyone. It's nice to see you again. Thank you, David. It's nice to be here. I was on an airplane. I was watching John Wick 2.
Ooh, that's good.
It's the story of a man, which is a story of a man who kills people who hurt his dog. I love that.
How much? And it's got Keanu Reeves. Who doesn't love him?
Yeah, right. He says like 3 words in the movie.
Yeah.
I just let the robot trade during that time, and the robot had a very difficult 2 months previous, and then it had just a spectacular Thursday and Friday as the market went up and down. And that's all it did. I didn't do any analysis.
Did you do any manual trades or?
I did a manual trade earlier in the week on an Australian news event.
But on the
UK. Honestly, I didn't remember that it was the UK elections. I don't even really know who Theresa May is. I thought she was a famous actress in England. So.
Actually, she is an actress in England because she changed her mind 5 times. 5 policy reversals. It's amazing. 5 policy reversals.
She'd be a great trader, back and forth.
Yeah.
Yeah, that's great.
Bien, bueno, hemos visto.
Well, we've seen different types to approach events, and we've seen that both Ashraf and Boris decided to to operate like that. And it's true, because we were in WhatsApp, they were flying, and Boris is from New York.
In WhatsApp, what I'm doing, I'm like, I'm going to miss my plane because I'm trading pound right now.
Nosotros preparados.
So we were a bit worried with the organizational thing, and Boris was on the plane, and Boris on the plane. I said, no, I'm operating here, so yeah, he's gonna miss the flight. Okay, and however, Rob decided to use his robots. That's his strategy, and not even noticing that there were elections in the UK. So we've seen the different ways in which these champions operate.
You're trading that fast-paced news.
Yes,
Are you doing your best?
I am a reactive trader. This is I always say, everybody in my room there are a few guys here in my room who trade with me. No, this is one thing I can't do anything else, but this is one thing I know how to do well. And reactive trading, it's like athletics. You understand what's happening, and then you don't let the market take you out, because the other most important thing about all of this is small size, no stops, and multiple entry. You will never, ever get it right on the first entry. That's the most important thing, is that I'm always scaling up, scaling down, because the market is a probability, histogram.
Let me ask you this. Can I ask him this? Because this is very important. I think that every day trader does it, or swing traders say it. Listen, I have a service that chases 200 pips, but I take those trades. But when I go after 10 or 20 pip gain, I'm going to close, and I'm going to get out. I'm going to get back in. I'm going to close, but not with the same size. But here's what I want to ask you. This is very important, because I do this a lot. So let's say that you are a reactive trader, right? Let's say something happens, and it's going down. You sell, you close. You sell, you close. You sell, you close. And when you specify your take profit, you do it like on an arbitrary 10 pip or 15 pip.
I do it even smaller.
Okay, smaller. Okay.
And I have an algo. I have an EA that does all this.
But my question to you is that, and everybody happened. You go in, you're out. You go in. At what point do you get out? Do you finish doing this? Because, you know, our
When do you know you're done?
When do you know you're done?
Great question.
Do you follow key support, horizontal support, the Fibonacci? Because these things that you talk about on TV, on your analysis and everything, we talk about it in a very intelligent way. But when you have this thing in our hand, or this computer, and we're making one profit after another, one profit after another, one profit, and our ego is growing, we're getting fatter, we're getting confident. When do you get out? When do you stop?
Okay.
Is Fibonacci the Italian candidate?
But he was born in a place in Algeria, which I'm from, so nobody messes around with Fibo, with the big fib. Roman Empire, you know, Algeria, Italy. Yeah, okay. Go ahead. Did you think about the answer or not?
The answer is, it depends if you're greedy or scared. Now, are you a greedy trader or a scared trader? That's the true answer to this question. I am always a scared trader. I am never greedy. So Ashraf will have lots of trades for 200 pips. My partner, Kathy, will have trades for 100 pips. They're both greedy traders. I will never, ever have a trade for 100 pips because I'm always trading scared. But I will also never have a trade for minus 500 pips. You really need to know who you are. The answer to your question is once. Even if I'm right, if I win on my news trade, I walk away, I look for the next news trade. Even though sometimes there's 50, 60, 70 more points in the trade, I walk away. That's because I trade scared. Now, if you trade greedy, then you pound it. And on good days, you can make 150 points. But on bad days, that third trade that you pound is going to go right up against you and blow you out. So it depends on your personality. You have to understand your personality.
Bien, bueno, vemos que la psicología.
Well, we see that the trading psychology has an effect on how we're going to operate. And those are very good examples. We've got Ashraf and Boris, in which, well, the operational management has very closely linked to your risk management. What's your risk approach, your risk profile? Rob, yes?
As much as possible. Okay, great. Great.
I actually think that it's, I think sometimes trading educators, and we're traders and we speak about the markets, I think sometimes we're disingenuous about, we like risk. We like it. I'm not afraid of a stop loss that's larger than my take profit occasionally. I don't like to say that I always have, any real trader doesn't always have a 10 pip stop and a 50 pip target. No real trader.
I never have that.
No one ever does that. So I have a general healthy appetite for risk. And every situation is a little bit different if I'm taking a discretionary trade. If I take a discretionary trade, I don't measure risk by the number of pips in a stop loss. I just prefer not to hold the trade overnight. I know that when I'm holding a trade overnight, it's because my trade sucks and I'm in trouble. And I hope that if I sleep, that God will bless my trade or something. Something magical will happen. The trade fairies will float down and they will bless my trade. But yeah, when I take a discretionary trade, I prefer not to hold a trade overnight. But I know that's different for you if you have a larger target and things are working.
Right.
We have a church. Tenemos una iglesia justo aquí al lado.
We have a church right next door. There's a church right next door. So if you have something, a position open, you can just go next door and.
Everybody turns a lot more religious when they start losing in the market.
Oh, yeah.
Including the big atheists like me. Nobody prays more to God than when you start losing to the market. Absolutely. I trade with a very bad risk-reward ratio. I do nothing that they teach you in the books. I am willing to lose 35 pips to make 5 pips. But I aim for 90 to 95% wins. I have guys in my room who trade the way I do. I'm not exaggerating. You can ask them. I think they've had like 100 consecutive winning trades. When you've made 1,500 pips and your total risk is 150 pips, they sort of trade the same distance, but they do it on a bigger basis. It doesn't matter. It all goes back to understanding that you need to at least the way we trade like an insurance company. We don't trade like a lottery. Everybody teaches you that you risk $1 to make $1 million. How many people win the lottery? That's what the lottery is. You risk $1 to make $1 million. How many people win the lottery? Anybody win the lottery here? Anybody ever win the lottery here? Right? How many times has the insurance company lost money? Anybody want to own an insurance company? I'll own an insurance company into the next century, because I don't care what technology happens, the insurance company is always going to make money. So what does the insurance company do? The insurance company says, oh, I'll pay you $1 million if you die for just $1,000, right? Why? Because they know you're not going to die. They know their risk profile. So the key is selection. The key is selecting, not being stupid, not taking somebody who's 95 years old, who's drinking and drugging and smoking and saying, oh, you pay me. No, they say no. To that guy, they say, you pay me $100,000 and maybe I'll pay you $110,000. You need to understand proper risk, and that's the hard part. But I trade very, very bad risk reward.
Bien, relaciones tan...
Well, such extreme ratios, and Boris gave an example. That's possible, but be careful, right? That's my personal recommendation. You have to take into account, well, maybe for new traders, be careful. Once you know what you're doing, maybe you can trade without stops or with a risk-benefit ratio that's extreme. Well, let's go to a different question. We've seen that we have linked everything through risk events like trading news. I'd like you to tell us, out of the past 6-12 months, your best operation. How did you manage it?
En tu caso,
Or Boris, in your case, a group of small operations, because if it's just one, it's going to be nothing. So.
To be very honest with you, my trading is very boring. Most of the time, it's these 5 pip trades per day. The times where I make the most money is like the UK election. The biggest money I made was, I don't know if you remember, after Brexit, about, I forget, maybe a month or so, there was a flash crash, right? Like the pound went 500 points in Asia, And I am one of those people that sits at the desk all the time. So, of course, I was at the desk and I saw it. I did not even think. I didn't even bother listening to the news. Right away, buy. I just instinctively, I saw this huge map. I knew that this, whatever it was, there was a possibility. But again, what did I do? Very, very small size, no stops. That was, I think, a 200-300 point trade for me eventually. After, during that day after I made that. Those are the cases for me. Those are the best days because I'm always on the opposite side of what's happening, and I'm able to manage, my winning trades that way in much larger size. Oh, one thing I forgot about news. Another thing that retail traders make a huge mistake on is, spreads sometimes are 15. Pound was 15, meaning, it was 15 pips wide. Doesn't matter. Don't worry about it. Do not. Actually, it's funny because Ashraf was texting me. He goes, "What's your spread?" I'm like, 10. He goes, "Oh, I'm only 3 because I'm on a real broker." I'm like, I don't care. It doesn't matter. When you're in a storm, they're going to go 100 points one way or the other. Forget the spreads. It doesn't matter. Just be confident in your position. And confidence comes from, multiple entries and small size. That's sort of,
Guys, for those of you who came to this panel discussion and you're hearing, I trade, I aim at gaining 5 points and I risk 50. And then you have a guy talking about a robot. And then you have a guy talking about trading against. And you said, ¿Quién es esta gente? Yo estoy aquí en un panel.
I am here in a panel.
My Spanish or English. ¿Quiénes están?
I'm just listening to cowboys. So what am I doing here? I'm here to learn. What the fuck?
My best trade is as follows. Okay. Patterns. There are some patterns that don't come all the time. But when they come and you know how to trade them, oh, baby. Oh, baby. So.
Oh, baby.
So. Can you say it?
Oh, baby.
So listen, guys, the inverted head and shoulder in euro-dollar that started to form in December of last year was a classic, okay? And I was watching it from probably November. We got stopped out in December with the Fed. But here's the thing. You've got an inverted head and shoulder. And the right shoulder in euro-dollar, so inverted head and shoulder, this means it's a positive. The right shoulder, as you look at the chart on the daily, on the weekly, was a 103, 103.50. And euro-dollar touched 103 in December of last year. And everybody and their brother and their sister and their lover and their mother, they said parity. To those of you who have been subscribers with us, we said no parity. I said it in Arabic, I said it in English, I said it in every interview, no parity. But it doesn't matter what I say on TV, it's how you execute it. And 12 out of our 14 trades in euro-dollar since December 2015, 2015, okay?
2015? The last 12 trades, 12 out of 14 trades.
And I'm talking about we made 190. The last one, what we did, we were long euro-dollar. Whenever euro-dollar would hem because of a Yellen speech or because of this, it would go up, it would go down, and it would respect the right shoulder. The right shoulder, you want it to be in the same level with the left shoulder. Okay, higher than the head, lower than the neckline. That target to me is set 112. I'm not lying to you. It's black over white. It's a Cartesian science. Whatever you call it, it works. Now you have to implement it. My best trade of the year was this, because it gave me confidence. And I was explaining to a client, we were long before the first round of the elections in France. But what happened after the first round of the elections? Euro-dollar did something that was amazing. So when you go to war, you need to have all the arms. You go to the trade, you're going to have the fundamental, the technical. The fundamentals, there were not much, but the technical, so the net longs, the CFTC net longs, which is boring for many, which is a week old for many, which is contrarian. The net long, it shows it broke. The net long, euro-dollar, meaning the number of contracts that people are long, euro against the dollar, minus short, the net longs, had broken above a trend line. But euro-dollar did not yet. That is one of the methods you use of the armory. But here is what it is. There's something amazing. The gap up that euro-dollar did after the first round of the French elections, we all know about the gap?
Yes.
El gappe, ¿cómo se llama el gap? How do you say it?
Hueco.
Hueco, pero luego.
Puedes decir gap también.
You could say gap or hueco.
Like to be experts who have these rules. They say every gap needs to be filled. Okay, go and sell beans or go back and sell God knows what, okay? Not everything has to happen in currency markets, okay? Things happen for a reason. But here is the beautiful thing why this was a real deal. Because the gap up, when it broke the gap, it was also happened with something small. It broke and it closed above the 200-day moving average, is the mother of all averages. And it closed above it. It didn't touch it like on election day, November 9th, when Trump won and gold rallied for a few seconds and euro-dollar rallied for a few seconds. It went above the 200, but it closed well below. So for us, the right shoulder became history, 103.50. We broke above 107 or 109, 200-day, a gap up. Then, ahead of the second round, we bought a 109.90. We bought at the top, 109.90. It was the top, but I knew that we were going to go above, not because my head and shoulder told me 112, but there were other things. And because the previous resistance became a support. Anybody will see that dollar. Now, again, I'll say this. To my clients, I go for 200 pips. But for me, I'm trading two lots, and I'm going for 20 pips. When I see that number, 369 in blue, I take it. When I see 275 in blue, in MT4, I take it. It's money that I made in my pajamas. I'm going to take it. So if the expert says, you have to sit on your gains and you have to cut your profit, no, you take your profit. But what do you do afterward? You don't put all your money at the top and go long. You have to know how to go, what to buy on top. And that's key. That's how to do it. And you have to manage with the size you put. Because if you say the market has gone up, I'm going to wait for it to come down to get in. It will never come down sometimes. How many times it happened to you? How many times it happened to you? It goes up. I'm going to wait for it to come down.
That's why, even on a micro level, even on a day-to-day when you're trading news, the trade you want will never happen, which is why you always have to have multiple entries. You have to have one entry pretty much right there, because if the market is going to break, maybe that it works right away. If the market is going to retrace a little bit, that's when you have the second entry and you come back. Now, it's an art. I only, at this point, only trade with 2 entries. But we have strategies, guys of mine have been trading, sometimes they go 3, 4 entries, 5 entries, and in order to even out. But the point is, all you know is probabilistically, probably, that you're correct. If you're looking for that one price, you're almost never going to get it. So price is very fluid. Trade direction is much more determinative, and that's the key thing to understand. I think one of the biggest differences between the kind of stuff that we do and the kind of stuff that they teach, that most trading gurus teach, is almost all of us use multiple entry. Because we know from experience that we're never going to be right on the first trade, but we're generally going to be right on the direction. That I think sums up what we do. We believe generally in the direction, but not in the specific case of the price.
Bueno, estamos viendo aquí increíble.
We are seeing, this is incredible, Boris, when that night on Thursday in October, you had those, you went long. That night it was 700 pips of fall. I saw it live, and I was really scared. So I hats off for entering. But as we saw that in terms of more of a long-term technical information, you had an inverted head and shoulder, and he took advantage to build his long positions and to get the benefit of that. And Rob, I'm afraid of asking you, but what was your best operation?
Getting married on March.
That's the good one.
While my robots were trading during the marriage.
Were your robots good to you when you were married? Did they make you pips?
So second one was I took all of my robot profits for the year, and I went to the Four Seasons in Paris with my wife.
Georges V.
The Georges V, not some backpackers Havel. And then I think my best trade was I was I was voluntarily trapped in a bad trade on the British pound, New Zealand dollar, which I also call the Orient Express. Like, you get trapped on that, leaves the station, doesn't stop. And I was trapped in that trade. Joel, we were in that trade trapped for a month, 2 months? Yeah, almost 2 months. And I don't remember when it was, but it topped out and it made a traveling salesman formation, or a 3 giant wicks, or a... whatever it is, I don't know, the inverted, upverted.
The pregnant doji.
The pregnant
at
doji,
night.
Yeah, the engulfing pregnant doji pattern. But I took an extra trade. I took a multiple entry. I took my largest trade at that last moment, and I sold the British pound, New Zealand dollar. Now that night, I went to bed, and this is what I looked like all night long. And I was just frightened that trade was going to get even worse. And I didn't have a stop on that trade either. That's how stupid I am at times. And I let that trade go until morning, and then I held that trade into the next day. I held that trade into the next week. And I think it was about a week and a half. It's the longest discretionary trade that I held in probably a year. And when that entire position got back to break even, when I just closed out the whole thing, washed my hands of that, and then it fell another 1,000 points, and I don't care. I was just happy to be out.
Get out of jail.
As we say in New York, you could give a F.
Yeah, I just was happy. So that was my best, was trying to solve a problem that I created by doing more of the same thing that caused the problem in the first place.
So this is a really important point. Do you mind if I pick up on this?
Sorry, yeah, Boris, one second. Related to Rob, perdón, me confundo con los idiomas.
I apologize, but with Rob, this operation that you did, you tried to defend it, and it really shocked me, the expression. You said that you were in bed praying for it to be come out nicely. But to what extent do we have to pay attention to what our body tells us, to our guts, or do we have to follow the trend when we have been for 10 or 15 years operating?
I think I try to do as little, I don't know about you guys, but I try not to overthink it. And if I get nervous about trading, or if I get nervous about anything, I do a really shitty job. I mean, I do a terrible job. So I try to ignore my feelings. Just about everything that I do. Generally, I just try to ignore them. I just think that trading from your feelings or whatever, I think you should just generally trade frightened. I think you should generally trade as protective as you can. But other than that, I don't think that if I go to bed and I'm worried about my trade, that doesn't mean I should close it. I think that just means that I'm worried and I'm frightened. I mean, you can't trade for a living and feel comfortable at the same time. You are going to have a month every year or 2 months every year where you just feel terrible and it's a problem and it's difficult. And if you give up at that point, then you don't deserve to do this.
Right.
This is not a game to play if you have feelings. Like if you are easily offended or easily upset, or if you don't want to be wrong, or if you're easily embarrassed, this is a terrible profession.
Somebody said one day, a famous trader said, one of the best jobs to know yourself is to be a trader.
Yeah, absolutely.
Is to trade for a living.
Absolutely.
Okay, and because why? Because if you try to assess yourself, you're going to lie to yourself. If you're in a relationship, or you had multiple relationships, bad, good, you try to assess yourself. No, you're going to be biased. It's always the other person's fault. But when you trade, you can say, oh, there's nobody, you're going to say, you're assessing yourself. You say, look how I am responding to this loss. I've taken 3 losses. I'm going back to basics. I'm actually going to study it. No, I'm going to take a loss. But when it's money on the line, when it's not your ego, it's you and your money and your feeling. And then it gives you no choice but to reflect on the past. In a relationship or in a job, or playing sports, you played a game and you try to assess how it went. You don't have time to try to assess in every move you did in the past. You don't have time, or you view it, but you view it in a partial manner. But when you trade, you remember every pip, every moment.
I remember literally every pip, every moment. Nobody is more superstitious than me. I have a whole bunch of quirks. If I'm in a trade and it's not going towards my target, I like to go for a walk. I like to do this. I like to think. If only I'm going to be doing work instead of watching sports, something like that, the trade is going to happen. There's a million different little quirks you tell yourself. Here's what I will tell you after 15 years: the market does not give an F. In other words, I could be, goofing off completely and the trade will be total profit, or I could be the most virtuous person in the world. The market.
Or you could worry a lot about a trade and it's profitable.
And it's profitable.
Or you could not worry
about a trade and
it has no effect on the trade whatsoever.
The market.
You either are following the rules or you're not following the rules. That's it.
And we all have superstitions. We all do stupid things. And it's okay, because you have to understand that you're a human being, but you have to understand that nothing you do matters.
Do you have superstitions?
I told you, if I'm going to trade for more than 20 minutes, it's not working my way, and it's like 2 pips away from target, I just walk away from the screen, and I'm going to go make some eggs. I'm going to do this. If I make the egg, and by the time I finish the omelet, it's going to be in profit.
I have to keep this rubber band around my wallet, or else my trades are unprofitable.
Right. Yeah.
I have this stupid thing. My daughter made this wallet for me, and I keep it with me. Right. Like it's a superstition.
I didn't know that.
There's a million, but the bottom line is, when you are objective about it, you realize it's all stupid. The market couldn't care less. It's going to make you.
Oh, no, this works.
Yeah, this works. But the one psychological thing that really, what Rob was talking about was super important. Super important. The one thing that has really improved my trading was even losing well. There's like 3 things you can do in the market. You can win, you can lose, or you can lose well. And I think the best example of that is the company called Virtu. Virtu is a high-frequency trader, right? It's a company that most of you, when you do your stock trading, you do your futures trading, you do any kind of trading, you're trading with them. They do, I think, 25% of all trades in the world at this point. And the guy who's the president of the company had a nice long interview, and he kind of gave away some very interesting points about what they do. They never lose money. They literally lose money 1 day out of 1,000 days. But what they do is they only win 51, 52% of the times. Most of the time, if they're not winning, they're just looking to get out even. This is the single greatest insight that I had into my own trading, that if there really, we know there's really 3 types of trades. There's a trade that works really well from the beginning, boom, you're done. There's a trade that kind of has to, take a little time before it works. And then there's a third trade where maybe it will, it will work, but most of the time it doesn't. That third trade where we're all going, maybe it's going to work, it's really important to understand that and to just get rid of it. Just, if let's say I trade with a 20-point stop, right? And the trade is minus 18 against me. If it goes back to minus 10, boom, I'm out. I'm happy to get out. It's much better for me to lose less and stop praying than to pray for profit, okay? And that's what Rob did. It doesn't matter that it goes 100 points before. You'll never make the 100 points. In New York, we have the statement, with the expression goes, if my aunt had balls, she'd be my uncle. Every trader I know tells me, if I just stick to my strategy, look, 10 of my ideas, they all went 1,000 points in the money. I'm like, you would have never made any of that because you would have sold it at +1 pip all the time. It doesn't matter what it did. It's what you will do. So the greatest advance, and I'm working on this continuously, is how to lose well. That's the secret to make money.
I think there's a misunderstanding, and then I want to hear what you have to say. There's a misunderstanding in the world of trading marketing education, like the trader marketers, the people that don't really trade. And they teach you that the entry is most important and that learning how to take a winning trade is important. Right. That is that's not the hardest thing to do for most of us. It's learning how to lose without losing everything. It's learning how to lose in trading. So I recommend to brand new traders, open up a small trading account and practice taking losing trades and learning to deal with it, learning what it feels like, and learning not to worry so much, learning not to derive your self-worth from your losing trades. Right. Because when you learn to lose well, you can survive. And if you can survive, you're going to be fine.
Right, because that's all it is. If you can survive, it's like Darwin. You will win. The winning really is just surviving, because the market naturally will, as long as you can control your losses by just losing well, and you don't have this one big loss that takes you out of the market, you will get better at figuring out the entries, figuring out the market, and it will just naturally build.
There's this important number or important ratio, which is very much in line to what Boris has said, which is there's a very famous trader out there who's been trading for a long time. Guys, please listen to this. His accuracy rate, his win to lose rate in the trade is less than 60%, but his rate of return is 40%. Think about that. Okay, so he does not always make money. It's less than 2/3. It's less than 3/4. But the reason that he's making money because he knows how to take losses. Now, how does this? If Boris has just said that, and Boris has just said that he often targets, 5 pips, and he risks 200 pips, and sometimes I do that. How does that fit with the ability and the obligation and the ability to be able to have a low win to loss ratio, but have a high rate of return? How? Because if he targets, and maybe correct me if I'm wrong, if you target 5 or 10 and you risk 200, that 200 is a minute part of your portfolio. And this is the big picture. It's not just reward to risk ratio, risk to reward ratio, but that risk is a portion of what size of your account. It's very important, guys, okay? And, we can talk about this often, but it's always related to the position and as part of the account. And if you want to go for 3, but then he said, but wait, Ashraf, but you said you guys are going to have various positions open. So how much is it? Well, because it's the size of those positions that is important. And that goes to what he said. You trade small. Not only in the big Brexit, this referendum, you trade relatively small.
Yeah, I just give you an idea. I trade 1 times my account per trade. Now, I will do 5, 10 trades a day, so that's equivalent to like 10 times leverage. So in other words, let's say if I have a $100,000 account, my trade is 100,000, not a million.
Lot. Just one lot.
One lot. That's my opening, you know, like poker, my opening bet is always very, very small. We have a saying in my room, 4x for 4x. 4x, 4 times for 4x. That's max leverage. So the maximum amount, if you're a day trader, if you have a 10,000 account, maximum bet is 40,000. And I think everybody here would, especially I know Rob would think that's crazy.
That's an astounding number. That's a huge trade.
That's a big trade. Yeah.
I think it's also important to have, you taught me this, I think it's important to have a garbage trading account. You just have like a little trading account off to the side, and when you have some crazy idea, some stupid idea, you put it in your recycling bin trading account. And sometimes they're winners and sometimes they're losers. And in that account, you can do all the crazy trading you want.
You trade 01. You trade 0.01.
And you just do all your crazy trades, your third type of trade. I don't know what this is all about.
Right.
But when you get out that need to trade and push buttons.
And also to test your robots. I have a robot I'm testing right now that's just a freaking disaster, and I'm trading it with 0.1. So what's the terrible thing that happened? I lost $80 in 2 weeks. Who cares? I do that in like 2 trades on a regular account. But what people make a mistake on is they'll take a robot and they'll trade it on their big account and they'll lose $8,000 in 2 weeks because they don't really know what it does. They don't know how to fix it. They're not comfortable with it, And that's a huge. What I do now is a really good rule. Anytime I have a new idea, new strategy, 1,000 account, just 1,000 account, 0.1 trade. Until I am super confident and comfortable with what I want to do, I do nothing. This way, it'll take me 6 months to lose $500. I could care less,
Bueno, hemos visto cómo la
Well, we have seen that the money management is important. The operational management and the size can influence, in psychological terms, our reactions as traders. But even though we may be 20 years operating and we do it for a living, we operate to make to get a salary or to manage our investment fund. In the end, we will always be worried. The fantasy of a certain point in time experience is going to make you free, or you can always be following some rules and could be unconcerned. That does not exist. We will always be slightly concerned because in the end it is our money or the money of our investment fund that we are managing. So, well, let's go for the audience questions. We are short of time. We are going to give you some extra time for you to have questions. So let's go for questions. Who wants to ask a question? Just raise your hand. It can be whatever is a stupid question, just a way of thinking, any doubt that you want to consult with our experts. So now is the time, and so don't be afraid, please. I cannot believe that there are no questions in the room.
Sentimientos.
Any comments, any remarks, any feelings? So if there's a question over there. Do we have a mic? The audio guys, so that we can listen to the translation and the recording as well, and the people who are watching the streaming.
Hola chicos de audio.
Hi, the audio guys. Now they are coming. Yeah. So we have a mic. Yeah, it's coming. Or Susana, if you are there, can you give it to the hostesses?
Bien, hola. ¿Te llamas?
What's your name? What's your name? Juan. Okay, Juan. One question. Is it for one of them or for the three? For the three of them, any of them. One question. Where or how can we make more money? How do you make more money? Doing courses or doing trading?
That's la pregunta más importante.
That is the most important question.
No sé yo si...
La pregunta gigante.
The giant question, the 1 million question.
What's that?
Que si queréis.
You don't have to answer if you don't want to.
Yeah.
No, the
Well, I
question,
think David should answer this.
the question honestly was by doing courses or by doing trading.
Yeah.
That was the choice.
Oh, okay. So let's just do a lightning round.
Okay.
Yeah, that's a good one. So how do
Okay,
you learn?
I think all of us have experience.
Yeah.
We all have experience about the markets. I could give a course. I go to the Middle East a lot. Okay, Saudi Arabia a lot. People are thirsty for oil and for courses. I could be making a lot of money in giving courses. I don't. He could be making a lot of money in giving courses or training.
I do give courses.
You give courses?
Yeah, and
Okay.
I do make a lot of money giving.
You do? Okay. For me, courses, I can do it much later on. It's another time. But right now, it's another challenge. But if you do courses, you have a credibility in doing courses while you are trading.
Yeah.
Okay? And if you're doing courses, your courses become more real and you're more accountable to people when you have trades to go back to. If you are just an institution of, trading, and your life, your raison d'être is to charge $3,500 per week or per month to trade, to teach how to trade, and that's it, then there are some serious questions.
First of all, I think Rob will agree with me on this, is that if you're paying $3,000, $500 for a course, you're being screwed. I think Rob and I teach courses for $30, $50, $100 maximum, because that's a fair price for the courses. Now, courses, to me, are a shortcut to knowledge. If you have somebody who's good, and this is obviously the critical thing, they can just teach you. We have a course that Kathy made 5 years ago. It's called Forex Fundamentals, right? And it's like our most popular course. There's nothing brilliant in it. It's just understanding the basic fundamental reports that move the market. So you could spend a year learning this the hard way by making all mistakes when you're looking at the economic calendar, or you could spend 3 hours listening to Kathy and you learn exactly why this report is going to move this market and this report is not going to move the market. And it's just, to me, the courses are not to learn to make money. They are to help you learn the market faster. Trading is, of course, the only way you're going to learn how to make money. But the courses, to me, are very valuable because they help you learn the market faster.
I think you learn by trading. I think the most important thing to do before you buy a course is open a small trading account. And then, really small.
Yeah.
And then just take a lot of trades.
Yeah, I agree.
And then you see where you're weak. You see what you need. You see what questions come up, and you say, I think I really like to look at the news. I think I'm going to read Ashraf's book, and I'm going to take Ashraf's $3,000. I'm just kidding. I think it's really important. You take a bunch of trades, and you learn.
Why did you lose money?
Yeah, why did I lose money? What did I do when I lost money? I think most of us should spend money on therapy before we spend money on anything else. This is the big problem.
Very good question.
This is the big problem.
Yeah, I mean, that's true. Yeah, psychology, but psychology is a life-ending course. Life is the course of psychology, right? Yeah. But to me, a valuable course is one. You don't know anything about the market. You don't know what a double top is or a double bottom is. You don't know what a fib retrace is. You don't know. See, we have a lot of knowledge that we just assume everybody knows, right? And we go, oh, you don't need to know this because we already know this, in the back of our mind. But you don't know this. So to me, to learn that, in a very well-informed way is valuable, as long as you don't pay $3,000 for that ridiculous. That's worth $30, $50. That's what it's worth. But it's valuable in and of itself. But it's not going to make you trade better, but it's going to make you know the market better. And if you know the market better, then you can begin to trade better. Because the other problem is that where I will disagree a little bit with Rob is if you just you trade randomly, you just trade, right? Yes, you learn how the market moves. You learn how your own psychology. You learn all those things, but you don't ever learn why the market moves. The courses really are there to help you learn why, because once you begin to understand why, that's what makes your trading better.
That makes sense to me.
Yo creo que como conclusión,
I come to a conclusion. Courses are always going to help the trader to accelerate their learning process, their training process, but there's also an important point that we discussed yesterday at lunch. During lunch, people are selling courses to teach people technically to do things right, and there are also who sell illusions, and so sell just a dream. And there are people who, in advertising, they sell a Ferrari, retirement, an excellent retirement. Those are dangerous, those are selling lies.
If a course has a picture of Maserati, don't buy it.
That is so true. Yeah. We call it, in America, we call it now models and bottles.
You will find this often with, ¿cómo se llama? Que empieza con el B.
It starts with a B and it ends with a Y. It starts with B and ends with Y, a binary.
Yeah. Affiliate deals, a 19-year-old boy who is working at McDonald's and then is driving a Bentley.
Binary options. One winner, one loser. Broker wins, trader loses.
Yeah.
Muy bien, otra pregunta. A niveles técnicos.
Any other question, technical question, how to operate or something?
Hola, no te veo. Ah, perdón.
Hello, my name is Jose Antonio. My question is for the three of them. I would like to know how was your experience in terms of getting consistency in your winning. How were your milestones, like how much time it takes you to start winning, how much time you spend being trading in simulation and things like that. And then another question I have is, by now for me really the most important thing is psycho trading. So if you have any advice to give us in terms of things you've done to help your own psycho trading. Thank you.
The what trading?
Psychological trading.
Psychological aspects.
You got to speak Spanglish, my friend.
Yeah.
Okay.
So, para los tres.
I traded a discretionary account for 15 and a half years, some winners, some losers. I made a lot of money in the early 2000s on the carry trade. I made a lot of money. I wrote a book about it. I mean, 90% of the money I've ever made trading came from buying the British pound in one account, selling it in another, and I had a magic carry trade, and I basically gamed the system, and that's where I made a lot of money. Then I went back to discretionary trading, and I had a really difficult time. It's very difficult to be a successful discretionary trader. And a year and a half ago, I just went completely robotic, and my consistency skyrocketed because I wasn't taking stupid trades for myself. This works for me. It took me 11 months when I first started to have my first winning week. And it took, I think, 3 or 4 years to have my first winning year.
In robotics?
In anything, at all.
Yeah, no, that's true.
At all.
Yeah. That's a really good metric. I think you expect to lose for at least 3 years. Yeah. Now, some people will do much better, but I think in any business, in any business, if you run a restaurant, if you run a cafe, it's almost impossible to get just comfortable, not even good, just comfortable until it's about 3 years.
Yeah. And then I have nothing to say about psychology. I'm the last person to talk about that.
But can I just say something which I think is very important, because you say something, but you have to define it. It's very important. Your question was blah, 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 before you made money consistently. Okay, what is consistently? And Rob's answer was perfect, because he made money during a time period, and he knew what that time period was. It doesn't make him a genius of a trader. He knew how to pick the right time. Take him out of time when there is the unwinding of the carry trade and put him in there.
I lost 25% of my entire profits when the unwinding of the carry trade occurred. So I gave back. It's exactly right.
So, okay, si tú haces.
Well, if you make money in a month or 2 months, or for 1 month, 2 months, or 3 months, instead of analyzing yourself and saying I'm a fucking genius, you just have to analyze the conditions in the market, and you have to say what's going on in this market, because I'm a genius. No, how did I make that money? Because when the conditions in the market start changing,
English now, whether it is risk aversion, whether it is unwinding of the carry trade, whether it is the market is no longer trending, it is choppy, and you don't notice it, so you're not making consistent money. Does that mean you're stupid? Does that mean you should go back to your other job? Does that, what does that mean? So you have to be able to know what happened. So you don't only analyze your P&L, analyze what the hell is going on in the market.
That is really the most important point. There are only two trades. There are only two strategies, period. Every strategy, there's 1,000 strategies you heard today. There's 1,000 strategies that I have, 1,000 strategies that Rob has, and 1,000 strategies that Ashraf has, but there's literally two strategies, period. One strategy is continuation, trend. The other strategy is chop, counter trend. If I ever wanted, the only gift I want from a genie or a god is to tell me if the market is going to be trend or counter trend. That's all I need to know to become the richest man in the world. If I know ahead of time what the regime is, it's super easy. If it's trend, I just buy every dip or I sell every rally. If it's counter trend, I sell the highs, I buy the offers. I sell the breakouts and I buy the breakdowns. The problem is, we don't know, right? That's the art. That's the art of, basically, the whole art is figuring out that when things are wrong, when you're wrong, when you think it's trend and it's chop, it's just to get out with as little loss as possible. So your question is, yeah, nobody's consistent. We have great years or poor years because when we are not aligned with the market. Like, I don't want to use a sexual metaphor, but it really is very much. When you're in rhythm with the market, it's like an orgasm. You're doing literally 10, 15, 16 trades, all in mind. And then when you're not in rhythm with the market, it's like the worst relationship you've ever had in your life. And that's really what it comes down to.
May I just add something, which is I explained to people, this is also very important. Listen, let's make an experiment here, okay?
Sorry.
Can you just go to... David, you want to... Listen, guys, I mean, it's the famous experiment, okay? So I give you, senor, $10,000. And I give you $10,000. And I give you $10,000. And I say, you're going to start trading on Monday. And I know, let's say Draghi told me that he's going to speak in a way that he's going to drive up the euro 300 pips, and that he's going to say that QE is going to finish soon, okay? He told me that he's going to say that on Monday, all right? So the euro will have to go up. So I'm just telling you that I'm giving you 10,000, 10,000, 10,000. And you go in and you see the euro going up. And it's going up. Even though I told you it's going to go up at least 200 pips for the next two or 3 weeks, by the end of the month, maybe it's very possible that all of you would have lost money.
Yeah.
Because I gave you all the same amount. You start trading in the same day, and you know that the euro is going to go up, and it goes up. But it's how you ride the wave, how much positioning you make, how much leverage you make. After 40 pips, Ashraf was right. Oh, baby, I'm going to put all of that. She's going to put 50% of her account. She's going to put 40%. He's going to close, but he's going to open 4 different positions because we told you open 5 different positions. But what portion of your account there? How does this relate to your answer? Is that what happened? The euro is going up, but then when it pulls back, there is a trend like gold. Gold is an amazing example. Since December of last year, gold went up in an amazing cycle, but the definition of higher lows was like page 1 of any technical analysis. Higher lows. It had just 2 sub-cycles from December until now where it broke the low, but there was key trend lines and a key moving average didn't. And those who knew, let's say you knew that gold was going to go up by, $300, you still lost money because you did not know what to do in the pullback. You did not know.
It's at that moment.
And it's
nobody knows. That's the whole point. The point is the market never makes it easy. It always puts doubt. And it's how you deal with that doubt at that point that really makes a big difference. So,
hey, Boris, a lot of people ask, this is just what you said, a lot of people want to learn how to take the right trade. A lot of people want to know when they're in a trade, did I pick the right direction?
Right.
Nobody knows.
Right.
That's not the right question.
Right.
The right question is, what are you going to do about what's happening right now in your
Money
account?
management.
Yeah.
Money.
No, it's absolutely true. There was one rule that I think is helpful. Somebody said, how do you know you're doing well? This is how I measure how I'm doing well. There's 1,000 risk parameters. There's the Sharpe ratio, Sortino ratio. They're all bullshit. They're all bullshit in my opinion. There's only one rule that Paul Tudor Jones, who's probably one of the greatest traders in the world, taught me that I've used all the time. And this is why it doesn't matter whether you trade with 35 pip stop and a 5 pip target, because none of that matters. The only thing that matters is how much money did you make versus how much money did you draw down. Your drawdown to profit ratio. So in other words, let's say you lost 10% in your account and your account is up by 1%, you're not doing very well. If you made 10% and your drawdown is only 2%, then you're doing really, really well. The rule of thumb, the great target that I go for is for a 2% gain in my account, I have a drawdown of 1%, right? Now, this is for somebody like me who trades with stops, okay? Rob is going to have a very different signature to his account, because the way Rob works is Rob's account is going to look like this. He's going to lose. Well, he's not going to have drawdown. He's just going to have it's unrealized. It's going to look like this, and then everything works for him, and he makes more money than he originally had. My equity curve is going to look like this. His equity curve is going to look like quite, and boom, comes back up right all the way above it. So you have to know how you trade. But a really good rule of thumb, if you're trading with stops, is you lose 2% in drawdown and you make 4% in return, you are a good trader. It doesn't matter if you make 1 pip and you risk 100. If the end result is that you're minus 2% plus 4, that's what makes you a good trader.
Yeah, I'm underwater so often I have to take a snorkel. And
This is true. Again, it's the same trader that I'm quoting. Again, Phil Brand, I don't know if I forgot what his name is, an old guy, he's like 70 years old. He's just going on Twitter and he's just giving for people, and he's amazing. He said that real traders, most of the time, and I'm not saying this is a rule, but a lot of the times you are underwater. Yeah. A lot of the time you have a drawdown. What is important is your equity. So there's equity and there's balance, okay? Right. So your equity should be higher than a week ago, but you can still have a drawdown. Right. And that drawdown is not the end of the world. And whether you're making stops for those or not, it's knowing how to get out, and knowing how to get out. And the other command of what tests you whether you're a very good trader is that, do you know how to get yourself out of trouble? Yeah, right. Whether it's John Wick or that other movie with Tom Cruise, what's his name?
Jack Reacher.
Jack Reacher. You have to know do you know how to fight yourself out of trouble? That's another test of character.
How do you, whether it's a bunch of losing trades in a row or it's a drawdown, you gotta,
Wait, can we talk about the worst trades we had? Yeah. I think it's much more important. I think everybody wants to hear about that.
Which one am I gonna pick? I mean, I have a lot of...
Just give me top 3 nightmares of your life.
Okay, I'm gonna take a minute to think about this.
All right, okay. I'll start, because it's always the same nightmare. It's always the British pound. It's always, my nightmare is the same nightmare every time. It's the British pound. It's doing something unexpected. I say, nah, can't possibly be doing this. I'm gonna move the stop. I'm gonna move the stop and I'm gonna add to the position.
It can't possibly go any...
There is 0 effing chance this is going to go another 100 pips against me. I'm going to move another stop. Then I get into, fuck you. I am not losing this trade. You can just let me go into my New York accent and tell you 1,000 curses. And no, I am not effing losing to you, you piece of turd. And the net result always is 25 to 35% of the account loss before I finally say to myself, okay, now, what makes it worse, and this is why the British pound is just the most sadistic currency, is usually right at that point, that's the low, and if I have wait another week or 2, I get it all back. I would have gotten it all back. So the one thing that has changed for me radically is first of all, I try not to trade the British pound that much, but I don't know if you guys noticed it, but I lost a little bit of weight since last year. And I've been trying to find the right way to diet, and I've never been able to find it. And this year I just decided no carbs, sin pan, like nothing, no dulce, sin pan, nothing, like ever.
Yesterday, what he did con el pan.
Ever, like ever. Not, just a little bit, not balanced. There's no such thing as balance, like just never, right? And it's the only thing that worked. Boom, I started dropping weight. And I said to myself, if this is true, then you have to say never without a stop, right? Sin stop. And that's what I said. Now, occasionally I will move the stop a little, like I'll have a small, piece of avocado toast, in New York once every couple of weeks. That's my moving of the stop. That's how I look at my life. But I've never, ever, ever traded without a stop, and never have lost the 25%, 35% of the British pound since I started doing that. But there is no exceptions. You have to commit. It's life. It's like I will never have a birthday cake. I will never eat a candy bar. I will never eat a piece of bread. It's not just for 1 month, not just for 2 months. You can never, ever trade without a stop if you're trading the way I do. With the exception, obviously, when you're trading, in news in very, very small amounts, because that's like once a year you can have a little candy. That's sort of my mental state of how I was able to control my worst trades.
Muy bien. Hemos visto.
Well, we've seen several different ways to get things together, but one very important thing to measure what the performance of our trading strategies, which is how much money you're making compared to your drawdown, and Boris mentioned that. And now we've only got 5 more minutes, so we've got time for another question, but it has to be really short. Sorry, he's using a microphone. We cannot hear what he's saying. ¿En qué horario?
What time frame? I trade. This is interesting.
There's nothing normal about the way, Boris. And I mean that as a compliment.
So the answer is, I don't care. I look at a 1 minute chart. I look at a 1 minute chart just because it's nice. It gives me, it gives me every single tick. I trade price, not time, right? So my whole strategy in the daytime is we trade what we call levels. The market comes to a certain price because a big hedge fund or a central bank doesn't care that it's the RSI turned 75 or that the moving average broke through. They care that the Eurodollar is trading 112 and they want to do a couple of yards, a couple of billion at 112 to make sure that it stays there, So I trade price, but I look at a 1 minute chart, I look at a 5 minute chart just for fun. But I don't use time as an element of my thing. I will say we do have one really, really good strategy where we do end of day. We look for big power candles, end of day, like when Ashraf was saying, that Euro candle post Macron where it went. What I like to look. This is a very, very simple setup. I'll leave you with a good strategy. A big move, and a big move usually is like bigger than the last 3 days, right? The high and the low is 150% of the high and the low last 3 days. Ends on the high, like the high of the candle, and the close of the candle is the same, or the low of the candle and the close of the candle is the same. That's very powerful. That's the market telling you, I feel strongly, really strongly about this direction. We love to the next day we go with that direction. And then there's lots of money management of how we like to manage it. But that's a really strong signal, and you'll see it on the charts. Go look on the charts, on the daily charts. You'll see the market is giving you a good direction of where it wants to go.
Muy bien, gracias por la contestación.
Great, thank you for that answer. I was going to tell you, now the first time you saw me with the 1 minute graphs, you thought I was crazy, but I think you actually like it.
Yeah, see, it all changes here. Right. I said, you're crazy. And then now that's all I watch.
Muy bien, Susana. Pues hemos...
Great, Susana. We're done with the panel. It was great. Well, I don't think I could really say much more after everything we had. I believe that it's shown us what you've done in the latest moments of the market and your strategy. So, really, I think a wave could be in place now. But well, thank you all for being in this Forex Day. I think you're surprising. This year you were even better. It was even better. But I saw you closer than ever. So I really loved it. And same thing to all of you. Thank you all. The truth is that it's been an amazing Forex Day.